Welcome back, everyone. Today I'm going to show you how I made just over 8,000 bucks on this gold trade. It was the only trade I took this week. I took 2 attempts at it. I'm going to show you the loss and the winning trade. The reason I wanted to do this is going to tie the course in together really nicely as to everything I have taught you guys. I'm going to show you how the fundamentals and technicals were paired together. And this trade presented itself on Thursday, at which point the course had already been filmed. But I decided to add this in as a bonus just to give you guys some more goodies to work with. Now, as you can see in the screenshot here, I clearly took the trade. All right, guys, so let's talk about what we have going on. So if we go back to where we start, we talk about market conditions and we talk about fundamentals. Without even marking out structure, this is clearly bearish, and there's no denial that this is bearish on the technicals aspect. The 4 hours were above most of the, or we're below most of the MAs, I should say. And the best part is peaks and valleys get retested. And of course, we got our vector POIs. So everything's kind of aligning within what I showed you guys within this course. There's one part I didn't talk about in the course, and that's what's called a liquidity cycle. It is on the page in multiple other videos for those of you that have went and looked at any trade recaps. But essentially what a liquidity cycle is price will build up, it'll channel, it'll react, it'll break, and it'll basically retest, and that's our entry. So here we have our channel, we have our break here coming soon, and essentially we're just gonna look at completing a liquidity cycle. Now I held a bit past, and I actually closed a little bit before the TP. I'm gonna explain to you guys the reasons why I did that. So first, let's talk about bias. Technicals, clearly bearish. Market conditions, clearly bearish. Last week, you could say we were CMC bearish, where we were kind of consolidating, but we're still moving down. This week, we're just impulsing down. We don't want to argue with the guys that made this leg. This cost billions of dollars to make. Chances are they're going to protect that high and continue with the order flow. Okay, market structure aligns, ranges, MAs, whatever you may call it. I call it ranges, but everything aligns in technicals. On the fundamental aspect, what we had was Middle Eastern tensions are gone. There's peace in the region. The war is over. So on that note, gold has no reason to keep climbing. The next thing we have is it's Q2. You guys have heard me talk about Q2, Q3, Q1. They like to take profits at the end of every quarter. So we're falling into that. Take profits, restructure orders, and restructure the portfolios for the hedge funds. This happens at the end of every quarter and at the beginning of every quarter. So for the rest of this week, we'll see restructuration, and then price will kind of do what it's going to do based on fundamentals. And the last part I want to point out, that day, Trump announced the China deal's been officially signed. What does that mean? Gold sells off further. So we have 3 fundamental reasons to sell. We have a technical reason to sell. There's actually not a single reason to buy. Now this report's a day later because it's reading Fridays, and this was Thursday's report. Nothing changed though. This was still all bearish. For those of you that aren't using this tool, you should. I'll leave it in the description. You guys get 10% off. And the reasons have not changed. It's all the same. Geopolitical easing, trade deals being signed. We think there's a Fed rate coming around September. However, that's priced in. Let's go back to, our chart. So what we have here now is our liquidity cycle about to begin. We're going to wait for this low to break. We have news coming, so we don't want open risk during news. We want to see what the news does. Forget what the news was. I don't think it was that important. Okay, so what is important is we break this low. We break this low. So one of 2 things is going to happen. One, price is just gonna retrace a little bit, continue down, or 2, it's gonna retrace higher and continue down. I don't know what level it's gonna hold. So we ended up taking the first trade at the beginning of New York, and we'll go down to the 5-minute. So after news, when the volume is being injected into the market a little more prevalent, I like to be on the 5-minute. Whereas outside of that, I usually use the 15 more. We can see price is forming. What do we have? we have our break, we have our vectors. So in a perfect world, either these vectors hold or we're gonna test the vectors that haven't been tapped into later. So I can look for a sell somewhere in here, or the backup plan is if price retraces higher. Again, we don't know if this is gonna continue down or if they're gonna take their time. What we do know is our direction. All right, cool. So we came up. Let's see what price does here. Vectors in, vectors out, and we get price basically doing this. I want to say the first entry we took was on this bearish engulfing candle. I think I put 100 pips of risk in, and if I remember right, we entered a little bit before the candle closed because we engulfed the first candle and the stop was just a bit above. So right now the volume's higher. We're still in session. I'm going to cover quite a bit above. When the volume starts fading out, I don't cover much above. So here, if you notice, we get another bearish candle down. So this is all good. Here, price is doing exactly what it's doing now. So now what I want to see is these vectors continue down, and I don't want price breaking this high. If this high gets breaks, chances are the probability of this trade works out, loses probability of working out. So we now go to the backup plan of selling higher. All right, so price does this. Here I start thinking about closing early, and price comes up here. When I see these vectors form, we're right at the high, I could close this trade. This trade no longer has probabilities of working out. So to be completely honest, I lost 40 pips on this trade, so I must have entered a bit lower. So I remember I closed this out of the 40 pip loss. So let's say we close this one out somewhere here. Do you see how much I reduced my risk? We had 100 pips risk. We're only losing 40 pips. That's less than half a loss. This is how you protect your account. So we take the loss and we just continue on. On this one, I end up reading the market right and price does come higher. Here we're testing the MAs and we are now tapping into the extreme vector. This is also where news injected volume. If this move is to continue, this high is not to be violated. If this high gets violated, this idea is invalidated. So we'll go back to the 5 minute here. Use 5 or 15. So we re-entered on the same idea on this break. So because the volume's low at this point, I don't need as much of a stop. So this is only a 35 pip stop. I could give it lots of breathing room. I think I gave the first position, I want to say 70 or 80 pips. This is lots of breathing room because this is actually heading towards New York close territory, and 3280 was my targeting. So this is the first position. You can see the risk rewards there on it. This was also my first trade of the week. If you can hear my dog snoring, I apologize. And price is going sideways. We're restructuring. Okay, so at this point, price starts moving in my favor. On this break and these vectors, we add more risk in. Right now, at this point, and I think, so I was actually at the gym when I took this one. So I think the total risk on these positions was 120 pips. Keep in mind, we lost 40 pips. Now, for those of you that are risk reward Nazis, you can see the risk reward on these is quite high because the volume is fading. I can get really small stops. This doesn't happen during New York or during Asia when the volume's kicking in. So this only happens at certain timings. So long story short, these guys end up running. So at this point, I can basically remove the risk off this completely. We could remove the risk off this one to this high. If this idea is to continue, we should not be violating this high. If price comes up there, the idea is no longer valid. So the price just ends up doing this. So I ended up managing this trade and closing early. Reason being was I had 2 positions, not 1. I don't need to risk anymore. I don't need to risk giving back profits. So this is around midnight for me. I closed somewhere around 1 in the morning. I just kind of got up in the middle of the night and I seen price was sitting around here. So I ended up just closing this out. The total gains was 820 pips. So if you do the math on that, we had total risk was 120 pips. We got 820 pips. That is like a 6R. And then we lost 40 pips here. So we're up 780 pips on the week. This is proper management. Had I had more trades on the week, and was in profit, I probably would have held these 2 targets. But to secure the week's payout, I made sure we close and secured profits. And 800 pips is a good, it's a good area to close. So if we go back, my initial target was 3280, and I thought it could go as far as 3260. Again, had I been in profit on the week, I would have held to at least 3280, but there's nothing wrong with taking profits and securing it if it's at a valid zone. And when I say valid zone, there is a reason here for price to stop. This is a powerful liquidity zone. We didn't have to break it. We did, but I know where to close my trades, and historically this has saved me many times where I got profits and price reverse. Yeah, that was the trade idea. This is how I like to see gold move. So if I get in and price starts moving against me, or it's kind of doing a sideways thing too long, if I don't have profits on the week, I'm gonna be very quick to close. I want to see gold react. I want to see it go in my direction. I don't want to see it come back and test the highs too much, you know, within reason. Like if it comes up and sweeps by 10 pips, I might give it that. So this really comes down to if I have profits on the week or not. If I don't have profits on the week and price is stagnant and it's sitting there, I'll cut my losses quick. I'll wait for another entry, and this is the kind of push I want to see. I don't care if I have to hold it for a day or two or three or whatever to hit my TP. I want to see it push away from where I got in quick and get rid of my risk. When my risk is off the table, it doesn't matter if it takes, you know, 1, 2, 3 days to hit target. It doesn't matter. We have no risk. We just let price do its thing, and if we need to manage and get out early, we do. So this was the trade. I hope you guys enjoyed this course. I hope you guys see the power of this strategy, the power of fundamentals. I hope you guys understand what it is I gave you here. If you practice this, if you learn fundamentals, if you work on your risk management, you can change your life with this. I do this for a living. This is my career. I am a gold trader. Like, this is a straight out honest context of how I trade. This isn't your 150 risk reward Instagram trades. Those guys don't withdraw profits. I do. So this is real trading. This is real management, and this is proper trading. This is all I did the whole week, by the way. I was at the charts every day. Nothing aligned with my plan, so I just sat out. The beauty of that is at the end of the week, I didn't have many losses to cover. I only had 40 pips to cover. So when I covered 40 pips with an 820 pip trade, left me with 780 pips. Had I taken a bunch of lower probability setups earlier in the week and maybe gave away a few hundred pips in stop losses, this trade wouldn't amount to much. So you can see how patience pays. And ultimately, I just want you guys to really appreciate this. I want you guys to learn it, and I want you guys to succeed. If you enjoyed this channel, please subscribe to it. If you're not in our Discord, get into our Discord. And ultimately, I'd love to see you guys at our firm, Momentum Funding. We're probably the only prop firm in the space that's actually teaching our traders, doing the weekly Zoom calls, and actually supporting our traders. So this is something I really stand behind, is giving you guys good education, giving you guys good support. I think you guys deserve it, and I don't think you should have to pay for it. That's my own personal opinion. Some may disagree, but that's the truth. Anyway, guys, I hope you enjoyed this YouTube, and I look forward to making more videos for you guys.